What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I hope the sound and settings are better. I did put a little bit of time in fixing them, and hopefully, I fixed my mic, fixed the settings on OBS, so see what we got. You tell me at the end of the video. But these WeeklyPa ETFs, I had to really look at them and study them a little bit before I made the call on buying them. A lot of these people are posting new videos and getting a lot of hits, probably just for clicks, on YouTube with these WeeklyPa ETFs. And are these really worth it? One of them, they appear to prevent and claim that they'll prevent NAV erosion. And one might be worth it in an experiment. And I'm going to go over that and tell you which one I think might be something I may buy to experiment with some play money. But I don't know yet. I'm still evaluating these WeeklyPa ETFs, and I'm going to explain to you why I'm closely watching them. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these WeeklyPa ETFs right now. So I'm on the Roundhill investment site. We have PLTW, which is the Palantir WeeklyPa ETF, or PLTR WeeklyPa ETF. We have NVW, which is NVDA WeeklyPa ETF. We have AAPW, which is AAPL or Apple WeeklyPa ETF. We have TSW, which is TSLA WeeklyPa ETF. And we have Coin WeeklyPa ETF. So there's a few things we want to go over. Okay. You notice they don't even have the performance yet. So what I had to do is actually go on Yahoo Finance and evaluate them, because even with Google Finance doesn't even have these ETFs on yet. So I had to do a little bit of digging. So it's so new that I have to closely watch it before I make the decision to buy them. And I'm going to have to use Yahoo Finance as a reference. But I'm going to kind of explain these WeeklyPa ETFs the way Roundhill invests in them and uses them for their strategies. So here's an example, okay? I'm looking at the NVDA WeeklyPa ETF. It's designed for investors seeking a combination of income and growth potential. NVW aims to provide weekly distributions and a calendar week returns before fees and expenses equal to 1.2 times, or 120%, of the calendar week total return of NVIDIA common shares. It shows the NASDAQ NVDA. NVW is an actively managed ETF. There's no guarantee that the fund will successfully provide returns that correspond to approximately 1.2 times, or 120%, of the calendar total week return of the common shares of NVDA. An investment in the fund is not an investment in the underlying stock. So they go over weekly distributions. NVW and all the other ones pretty much is you're just switching words and symbols, okay? So they all pay distributions every week, recurring income stream for shareholders. So enhance exposure. NVW seeks to amplify returns by targeting 120% of NVIDIA's weekly performance. NVW provides a potentially powerful combination of a single stock leverage and weekly income. So again, expense ratio 0.99%. So you see this right here, the WeeklyPa, the swap 100%, 100.6%, and you have NVIDIA Corp, 19.96%. Okay? So again, you're seeing the NAV, it's not really showing much yet on here. So that's something that a lot of people have not caught yet. So this is why I had to go to Yahoo Finance. And I'm going to evaluate all 5 of these and this new WeeklyPa ETF that's supposed to prevent this NAV erosion. So we're going to jump to that. So I had to go to Yahoo Finance because these are kind of new, and it didn't even hit Google Finance for me to evaluate. So the Roundhill NVDA WeeklyPa ETF. Since it started, it's down 27.92%. So it's not very, so far, not the best, okay? So on February 19th, 2025, it started at 49.89. Now it's down to 35.92. Wait, it opened, yeah, so it closed at 35.92. Okay? So there's a little bit of a decrease, 27.92%. So I had to even look closer to make sure I'm as accurate as possible for you guys. Now let's look at the distribution history. Okay, so we're having a distribution history of 37 cents, 26 cents, 19 cents, 55 cents, and 29 cents. So yeah, the one issue with NVIDIA is it's going down, okay? You know, the price per share is going down. Okay, I can understand that. That's why I'm still closely watching NVW. So you saw the NAV erosion that's going on. The distribution history is, you know, 37 cents, 27 cents, 19 cents, 55 cents, and 29 cents, and it's decreasing. So kind of stings a little bit if you're an investor and you bought it right when it started. Let's jump to the next one. The next one is the Roundhill TSLA WeeklyPa ETF, which is TSW. So that one's been down 34.65%. Kind of sucks with the situation. You know, people are panic selling with Tesla. I've been buying Tesla in my IRA. I'm going to be honest with you. I've been buying TSLP with the curve yield invest. TSLY ETF's been getting hit pretty hard with the yieldmax ETFs. So that's another issue. So again, this one I'm closely watching, and I'm going to show you the distribution history on how it looks, but it's down 34.65%. Yeah, the Tesla stock is not looking good. I mean, that's kind of understandable, but this is why I'm closely watching, and I'll show you the distribution history. So its distribution history is not too bad. It does have a little bit of an aggressive distribution. Problem is the net asset value is going down, but here's its weekly pay: 39 cents, 21 cents, 24 cents, 32 cents, and 37 cents. So that's not too bad. And, you know, again, things are very volatile with Tesla, so you can understand why it's going down. Let's jump to the next one. Here's another one, the Roundhill NVDA WeeklyPa ETF. So since inception, it's down 27.92%. When it opened, it was 49.84 on February 2025. Now it's 35.92, so it's down 27.92%. And yes, NVDY is pretty cheap, and a lot of, I'm sorry, not NVDY, but NVIDIA is very cheap right now. So I've seen on X, many people have been buying NVDY. NVIDIA is one, I have a lot of shares in NVIDIA stock in my IRA, my traditional IRA. So it's kind of understandable that this one's down right now. So let's jump to the distribution history. So NVW's distribution history: 37 cents, 26 cents, 19 cents, 55 cents, and 29 cents. So again, it's the net asset value is going down. Got a decent distribution, but I'm still I mean, maybe it was a bad time when it launched, but it's starting to look like the Roundhill ETFs that are weekly payers. There's some NAV erosion. Now this one, again, 120%, but with this high distribution, is this stable? Is this something I can rely on in the future? Probably not right now, especially in a bear market or when the market's not jumping up too much. And if a recession happens, because there are some recession fears still, I'm not it's not reliable. That's a problem. If I retire and I have to rely on these WeeklyPa ETFs, so far, this does not look good. So let's jump to the next one. This one's getting killed. The Roundhill PLTR WeeklyPa ETF, PLTW. Right now it's 31.54. When it launched, it opened up at $55. Right now, it's 35.90. So it's down 42.65%. But let's go over its distribution history. And this doesn't look really good. Okay, 18 cents, 17 cents, 45 cents, 47 cents, 51 cents. And its net asset value is dropping significantly. Now, I do believe, this is what I see, that Palantir is way overvalued. And it's starting to maybe the investors who are new to it are starting to get a reality check that maybe they should have bought it when it was really cheap, because maybe it's way too overvalued and now there's starting to be a correction. So because of that, this one, PLTW, going to be hit pretty hard too. Let's jump to the next one. Here's another one that is getting killed. The Roundhill Coin WeeklyPa ETF COIW. Right now it's 29.23. So it opened at 50.27 on February 2025. And now it's 29.23. This one is getting shredded right now. And it is getting used and abused. And then we're going to jump to the distribution history. So the first distribution was 31 cents. The second one was 34. The third one is 56. Next one is 18, and the next one is 48. So far, this one looks like the worst one out of all of them. And this one, for sure, I probably wouldn't touch with a 10-foot pole. This one may be at the highest risk if it starts getting worse and worse of a split, potentially. Let's go to the final one. This one out of all of them have surprised me the most. Now, I don't know if I'm going to take a stab yet, but the Roundhill AAPL WeeklyPa ETF, the symbol AAPW ETF, going down 15.18%. Out of all of them, I would probably consider this one, I myself. Am I buying it? No. I'm going to wait 5-6 months to evaluate all these ETFs and then make the call, because all of them have been down. Yes, Apple's a little bit down. Apple's a great growth stock. Actually, it has really good dividend growth. One of the Mag 7. So this one, out of all of them so far, is the best one that I've looked at. And I'm going to show you the distribution history. And so far, this one is the distribution. You're getting a decent amount of distribution. 24 cents, 20 cents, 22 cents, 12 cents, and 27 cents. So not looking too bad right now. But it still is down. So of all the 5, this one might be possibly the safest one, but it's not completely safe at all. A lot of people are buying it into the high yield. But again, look at QDTE, RDTE, XDTE, YMAG ETF, YMAX ETF. They're dropping. msty ETF is dropping as well. It's almost at equilibrium. It pretty much is, but you know, it's not safe, not very safe. So you're seeing a decrease in distributions in these yield max ETFs, the WeeklyPa ETFs. But there is one that is interesting, and this is the weekly T-bill ETF. This reminds me of that TGIF ETF. It's a short-term treasury bill ETF designed to pay weekly distributions of current income of shareholders. Week is the first of its ETF that targets a stable NAV week over week. It is an actively managed ETF. So you got weekly distributions. It tries to make sure that the NAV is stable week over week. The other WeeklyPa ETF's NAV is not very good. So you see all the holdings, treasury bill. Here's its performance. It's probably going to be around $100. Okay. But I mean, the expense ratio is not bad. Let me go over that. Let me find it real quick. It's not too bad. Let me find it real quick. 0.19%. So that one's not bad. But look at its distribution. So you pay $100, okay, and I get 6 cents, 7 cents. That doesn't really appeal to me. So what am I going to do? Get $1,000 and get 7, 14, 21, 28, like next to nothing, okay? I got a 0.19 expense ratio. That's not very attractive to me. So right now, none of these are attractive. And I'm going to conclude everything. So concluding everything, are these worth it? Overall, no. I'm going to still closely watch them. None of them are, if I was given $5,000 right now, and I've been doing my travel nursing, and eventually I'm going to be working as a nurse practitioner. Hopefully in July, things land, things change. So I'm going to have to surrender my travel nurse pay to become a nurse practitioner. Is it really worth it to buy these? I'm going to say no right now. I'm still going to closely watch. And the one that prevents NAV erosion, to pay $100 and get 7 cents, no. That's, unless if you have a crap load of money, that would be worth it. I can buy, the curve yields. I can buy FEPI, AIPI, SEPI, ETF. I could buy a lot of these, okay? Curve yield, I can buy the NEOS, ETFs. I'd get a little bit more juice out of them, okay? The juice is, the squeeze is good with that. I need some juice to build my dividend portfolio. And I ain't getting that with $100, paying $100 and getting 7 cents a week. No, thank you. Is the AAPW worth an experiment? I'm going to say no. I considered looking at it, maybe buying it, doing an experiment. It just doesn't appease me yet. Now I'll, again, closely watch them. I'm a high yield dividend investor. I love high yield investments. But I don't know about these WeeklyPa ETFs. I don't see something that is worth it long-term material. If I'm going to retire on dividends, if I'm going to retire on passive income, or live off of dividends, live off of passive income, that's not worth it to me. And if we hit a recession, if we hit a bear market, I mean, maybe a bull market, you might have a chance, but it's just not looking good. And it's not worth my money and my investment. An expense ratio of 0.99%. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I hope my sound was better for you guys. So let me know how it is. You guys take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. By the way, you don't have to buy things because I buy things. If you're looking for financial advice, you go to a financial advisor. If you're looking for tax advice, you go to a tax advisor. Don't use any of my videos or posts on social media, X or wherever I'm at, as a form of financial advice. You go to a financial advisor, you have to understand that you have to do your due diligence when it comes to investments. You can lose money. Look at these WeeklyPa ETFs. Look at these yieldmax ETFs. People are losing money. So you have to understand the risks when it comes to investment. That's your call when you make the investment. So just being very straightforward with you, very transparent with my dividend investing strategy, what I buy, and I'm doing this for entertainment purposes only, and you know that. Take care and have a good one.